Hello everyone, welcome back to another hashtag Finance Friday, and today I'm super excited to be talking to Varonique Philander. She's the founder of Chaya Legal, and remember, today's session is all about why we would want to be a company versus a sole proprietor, because that is the question on so many small businesses' lips. So I thought it would just be good to have a lawyer on board with us today, like not just accounting here at Finance Friday. We have lawyers here. So Varonique, over to you. Please go ahead, introduce yourself. Tell us quickly a little bit about Chaya Legal.
Hi, Christine. Thank you so much for inviting me. My name is Varonique Philander, and I'm from Chaya Legal. And what we do is we provide affordable legal solutions to small businesses. That's sort of in a nutshell.
Awesome. I love that. Okay, well, let's jump straight into the topic for today, right? Sole prop versus company. Just quickly tell us, what is the difference between these two, and why is it such a point of contention? Why would we want to be one versus the other?
So basically, a sole prop or a private company is really referring to the business structure or the vehicle that you choose in terms of, how do you want to mobilize your business concept? And it really comes down to what is the easiest. And a sole proprietor is basically the easiest type of business form that you can choose. There's no specific legal formalities in terms of registering a sole prop. Essentially, you can decide tomorrow that I'm going to start a business and I'm just going to start the business under my name, a trading name, or I can choose a different name, and there I go. Whereas with a private company, there's a piece of legislation like the Companies Act that actually regulates how the registration needs to take place. You have to fill in certain forms, and then you have to actually take these forms to what we call the CIPC, which is the Companies Intellectual and Property Commission. And then basically follow all of the steps that they set out, and the actual requirements in order to actually qualify and be able to register a company is a lot more difficult than it is for a sole proprietorship.
Right. Okay. Yeah. And I think sometimes we think it's expensive to register a company, but as far as I understand, it isn't actually as bad as some people might think. But I think the problem sometimes comes in terms of maintaining that status, right? You have to do your annual returns, and you have to do annual financial statements, and maybe you even get to the point where you need to be audited, and all of those things get rather complicated, which you wouldn't normally have if you were a sole proprietor. So can you talk to us about like the pros and cons, or the risks and responsibilities that come along with either being a sole proprietor or being a company?
Yeah, I think that's such a good question. If we first look at the sole prop, obviously we said it's really easy to start. But with anything that is easy to start, normally there's a couple of drawbacks. So one of the big things with the sole prop is that a sole prop is essentially you as the individual starting a business. So there's no separation between your affairs and the business affairs, essentially from a financial point of view. They all become one. And so from the perspective of a creditor, if you perhaps owe somebody money as an individual or in your personal capacity, that can definitely have some repercussions for your business and your business assets. So now a creditor can come and they can actually take and write up all of your business assets, and then you have nothing left. And so that's one of the biggest drawbacks, that there's no separations between the owner and the actual business. One of the other things is succession. The fact that, you are directly connected to your business. So if something happens to you, your business won't be able to continue. And I think that's, to me, one of the two key drawbacks of a sole proprietorship. From a company point of view, one of the biggest drawbacks is obviously all of the admin. And if you, like me, and you don't really like all of the admin, then maybe, maybe a private company is not for you. But unfortunately, it is probably one of the most popular business structures in South Africa at the moment. And so one of the key things is the compliance and the cost of compliance, because the bigger you get, the more expensive it becomes, because like you said, you would then now need, people like yourself, your accountants, to do all of the work. Of course, you are very affordable, so we don't have that problem with you. But ultimately, it's about also knowing what it is that you need to comply with. And a lot of the times we find that because you just hear as a business person, I need to register. You find out, okay, you can do it online, and you go through all of the processes, but you don't know that there's a piece of legislation that sets out specific requirements, like for example with annual returns, that it's not just a once-off thing, it's actually an every year thing. And now I need to submit certain figures and financial statements and so forth. And how do I go about that? And it's really understanding those legalities in order to be able to comply. Otherwise, you get deregistered. And a lot of people don't even know that. They think it's a once-off registration and everything is hunky-dory up until the point where they get the fright of their lives and realize, oh, but, it's actually not. I was supposed to do A, B, C, D, and I didn't.
Absolutely. Yeah. And I think that's a really valid point to consider. And we'll be chatting a little bit more about small business corporations tax next week, because I think that's one of the benefits you could potentially have as a company, right? Because there are certain rules that allow you to have less than 28% tax if you are a company. And we'll talk more about that. And that's maybe one of the benefits around company. But I've found in some of the discussions I've had over the last little while is that people think, just because I'm a service-based business, maybe I can get away with being a sole prop. Whereas as soon as I have a product, now suddenly I have to register as a company. Is there truth to that, or is the best recommendation actually that everyone should incorporate?
I think from my personal experience and my sort of view on this matter is that it doesn't necessarily have so much to do with whether you're a service or a product-based business, but rather on what is the purpose of the business that you're wanting to pursue. So if, for example, you just want to validate the concept, it's perhaps best to first start with a sole prop and first just see whether there is sort of an appetite for the either service that you're wanting to do or whether it is a product that you're wanting to sell. Because of the administrative burden that a company registration, if you have to go register a company holds, there's an administrative burden, but there's also a cost factor. And if your idea is just to validate and to test the market, it's best to just first start with validating the concept as opposed to looking at the vehicle. Because I think what mostly happens is that people are so quick to jump and choose any type of a vehicle, but they don't know whether it's the appropriate vehicle for the business type that they're wanting to execute. And I think that is, to me, probably the critical thing to look at.
That makes sense. And I guess when we are planning our business, we have to start thinking about these things. Like, this should be one of the key factors that you are considering when you come up with your idea and when you start looking at your business model and structuring and all of those things. This is one of those key factors we need to consider. Varonique, you mentioned just now that maybe there is a little bit of risk if you are a sole prop, and creditors can come after your business assets either way, your business creditors can come after your personal assets. And for me, I think that has always been something that I need to be careful about. So I'm still a sole prop. I haven't incorporated yet because for me, there's no tax benefit at this stage. But I think I've been able to protect myself to a certain degree because actually I don't really have personal creditors. And because I'm in the service space, I don't really have creditors from a business perspective either. So for me, if anything had to go wrong, it would be someone suing me for negligence or something weird like that, right? So I can do things like professional indemnity insurance, or I don't know, just a general public liability if I had an office, or even just making sure I'm putting some clauses in my contracts to make sure that I'm protecting myself. Is that enough? Should I be doing more? Or what is your perspective on protecting yourself if you are still a sole prop?
I think one of the key things that we have to remember, even though you might have a sole prop, is you can still trade under a different name. So there's still even though, you know, from a finance point of view, you one in the same, you can still separate your business from your personal affairs, through making sure that, like, for example, you say you are a sole prop and you are not trading under your own personal name, you are trading under UPvisor. So that's one of the steps that you take. Separate bank account, that type of thing. Keep everything separate from that perspective. Insurance, you know, taking out the necessary insurances depending on the industry that you are in. Making sure that all of your contracts are in place. Making sure that that your customers understand your processes, communication, all of those sort of things. Those are all sort of ways in which you can protect your business from possible legal risk. But it's really important to have the right structures and processes in place, I would say, to try and keep it as separate as possible, and so that people understand what they're able to do now.
Absolutely. Put them in nice tidy boxes, right? I think that's
Yes.
the thing. Like, you need to be able to separate it in some way. And whether that is then incorporating, or whether it's, as you said, like having separate bank accounts, all of those things, you need to be clear in your own mind how it's separate, and you need to be able to communicate that to your customers and your suppliers as well. That's really important. One final question. If someone watching this would like to incorporate their business and they would like to reach out to you, where would they be able to find you?
Well, that's a great question. I love that one. Well, they would be able to catch us on either Facebook or Instagram under Chaya Legal. We have a page. They can also email us on info@chayalegal.co.za, or they can go check us out on our website at www.chayalegal.co.za. And we would love for you to reach out so that we can assist you to choose the right business structure, because there's so many. That's not only sole props and private companies. There are many.
Awesome.
Yeah.
Well, thanks so much, Veronique. Really cool chatting to you. And that brings us to the end of our #Finance Friday for this week. Remember, next week we will be talking about small business corporations tax, which is about how you can save tax if you are a company, but, you know, all sorts of other rules and regulations apply. So come check that out next week. And then if you missed us last week, we had our first session all about pricing, and Varonique actually was one of our attendees there. And that is all part of our training academy for October. So if you missed out on that session, don't fret. We have the recordings all set up for you, and we will be having our application session coming up next week, Wednesday. So make sure you register, comments down below. We will also be tagging in Veronique's pages down below. So do make sure you check that out. Until next, bye-bye.